It's the people at the bottom that are getting squeezed with higher gas prices, higher food prices, and rent. So I think we're entering a recession unseen like any other, where the bottom half are going to get devastated, and those in the upper quarter to upper 10% will spend less, not do as well, but pretty much weather the storm. So this gap between the rich and the poor is going to get wider and wider.
That's why we rallied 200 S&P points in the 4 days leading into today, because the markets are driving on one side, and the BLS hasn't yet captured that. Unfortunately, the Fed is also lagging in how they are reacting to things. They're driving also with the rearview mirror type mentality.
Now, they think the dollar's a safe haven for historic reasons. It's not. It's not. We're the largest debtor nation in the history of the world. But since people think it's a safe haven, the dollar will have a big rally, might get overpriced, might turn into a bubble. I hope I'm smart enough to sell it if that happens.
James Rogers Jr., popularly known as Jim Rogers, chairman of Beeland Interests Incorporation and co-founder of Quantum Fund and Soros Fund Management, is an accomplished American investor and a financial commentator. When he speaks, the financial gurus listen. Today, we will have his take on the fumbling equity markets and why he believes the Fed are not to be trusted to properly manage the economy. If you haven't already, click the subscribe button and the notification bell. We promise you up-to-date market reviews. Let's listen to Jim Rogers.
In my view, what I said was that, yes, we will have a bear market again someday. And when we do, it will be the worst in my lifetime. You remember 2008, 2009, we had a big problem. Well, because of too much debt, since then, the debt everywhere has skyrocketed. It's staggering how much the debt everywhere in the world has gone up since 2009. So it has to be the worst in my lifetime. I'm not trying to scare people. I'm just making a simple statement of fact. The debt has skyrocketed everywhere, and we always have bear markets. So the next one has to be very, very bad. Has it started yet? In my view, there's so much pessimism around that usually leads to something happening and causes a big rally. If that happens, it'll be the last rally, if you ask me. If we have peace in Ukraine, or if the Federal Reserve says, oh, we're sorry, who knows what. We'll have a big rally, and that'll probably be the last rally.
Things were going well before the 2020 pandemic, when productivity took a nosedive and the markets were rendered dormant, with most businesses and international trades shut down. The United States had to respond first to ease the suffering of the people, and this meant digging in to raise liquidity despite a comatose GDP. Soon the Fed's balance sheets moved from a $4 trillion deficit to a whopping $9 trillion in just the space of 2 years. This deficit was caused by the Fed's aggressive buy-off of Treasury bills, mortgage-backed securities, and corporate bonds. The current administration has come up with a 10-year plan to bring down the deficit through cut-down measures that would see more money being freed for the Fed with cuttings of about $1 trillion annually. At this rate, we could be back to pre-COVID conditions in another 3 to 4 years. There is a downside to these cutback measures. The major one is a reduction in liquidity, and reduction in liquidity means there would be investment contractions, as there would be less investable funds in circulation. The NDR warns that trading liquidity would get to levels seen at the height of the market crises of March 2020, leading to what it calls a corporate distress. But why is the US dollar strengthening despite a slowing economy? Jim Rogers talks about this next.
I own a lot of US dollars, and the reason I do is because when the turmoil comes, people look for a safe haven. Now, they think the dollar's a safe haven for historic reasons. It's not. It's not. We're the largest debtor nation in the history of the world. But since people think it's a safe haven, the dollar will have a big rally, might get overpriced, might turn into a bubble. I hope I'm smart enough to sell it if that happens. And your next question, Dave, should be, what are you going to do with the money then? And that's a very good question. I look every day to find out what's going to be the next competitor for the US dollar. If you know, Dave, please do not announce it. Do not announce it on the program. Send me a private email, because I'm looking every day to figure out what it's going to be. Logically, it would be the Chinese renminbi, but the Chinese currency is a blocked currency. You cannot have a world currency that's blocked. So I don't know what it's going to be.
It should be recalled that the U.S. entered a recession that was sparked by bad mortgages, essentially, bad debts. Global debts domiciled in the US dollar, which control global markets, is helping the US dollar strengthen. Mr. Rogers believes that debt would also be the undoing of the US dollar. This is because the US is actually the leading nation in debt, which has gone up about 300% from 2008 to 2022, now standing at about $30 trillion. National debt is not actually the big issue. The big issue is the debt to GDP ratio. It would interest you to know that in 2008, the debt to GDP ratio was just 68%, and now it stands at 120%, an indication that the nation is basically on life support at the moment.
I mean, I've been around a long time, and there have been very few good central bankers in history anywhere. America's had, I can remember 2 in the last 50 or 60 years. India had a very good central banker 5 or 6 years ago, but he's gone now. They're just not very, these are bureaucrats. These are academics. None of these guys are very smart. All they want to do is get a government job and keep a government job. They don't care about you and me. They care about getting a nice, sweet government job. They don't know what they're doing. And yes, they will probably get it wrong. You know that a few months ago, they were saying there's no inflation. And they said, oh, well, it's transitory inflation. I mean, if you listen to these guys, or if you go back and read them throughout history, you say, oh my God, how could these, and they all have fancy Ivy League degrees. Oh, they have great Ivy League degrees, which means you should be very worried about them because they don't know anything even more. By the way, I have some Ivy League degrees, so when I say that, I speak from experience. I speak from experience, but they will get it wrong. As I said before, maybe what will happen, oil prices, grain prices have been coming down. If there's peace in Ukraine, many prices will come down. The central banks will say, see, we saved the world. And then they'll start loosening up again. They won't be so tight again. And that will lead to that rally I mentioned before, the last rally. I mean, you have to watch them because they have certainly good influence and sometimes big influence, but do not listen to them and think they know what they're doing.
Just like Mr. Rogers, who expresses fear on the Fed's competence, funds manager Cathie Wood had earlier raised the alarm that the Fed is focused on using the Paul Volcker strategy, which ended up dragging the U.S. to its worst recession since the Second World War. You can check out our other videos to listen to other financial experts address the errors in the Fed's strategy. How soon do you think we would see a wholesome economic recovery? And what path do you think we have to take to see it? Leave a comment below and don't forget to give this video a thumbs up. Thanks for watching.